So this is net, right? So I also like looking at the individual sides, but I can tell you I've looked at the individual sides for the SPX, and there's not a lot of put charm up here. I mean, there is. You can see it here. So a couple things are apparent, right? So this is looking out in time, right? So we're looking out at the OPEX here, right? That's what this line, series of lines right here are. And you can tell, so that we're out, 9 days, 8 days, whatever it is. And you can see we got multiple strikes. You can see that with the peaks here. So just getting everybody oriented as you flip these things around, what are you looking at? And because it's net, you have a couple potential things that are contributing to the net. For the nearest expiry, right here, this is the front expiry, and it's, because this is the SPX, then this is going to reflect every day, right? So this is, since it's 1600, this is going to be looking at tomorrow. And it's telling us that out of the money puts this is the decay side of the puts, right? So these are out of the money. So if spot price remains constant at 42.68, and we could just sit pat, right? We could freeze spot price. Markets did not move tomorrow at all. This would decay to a point where the in the money calls, the charm, whatever remains, would then become dominant at some point in the day. But for now, we're starting the day. Out of the money puts are dominant. They're dominant up here at 4,200. And yeah, so that's kind of, and then we have another one here at 4250, and we can zoom in here and you can see this. You can get on this. Looks like it's 1 day later. So this is going to be Fridays 4250, et cetera, et cetera. So this is telling us we've got out of the money puts that are decaying, which are supportive. Would be my first thing to say about the SPX. We're not going to collapse. We've got basically puts below us that are near dated. And with puts below us that are near dated, we are supportive in any movement downward, and we'll talk. And that movement could backfire, right? I don't want to say that because we have puts, we can't move down. That's not what I'm saying. I'm saying we have puts below us that, in the presence of no spot change, are going to be supportive to charm flows. Now, what does that mean? It means the book, if this is the dealer's book, and this is the dealer's book, because this is the SPX, so this includes the A's and the P's. The dealer's book, as these things decay, are giving positive charm. We're getting less negative, more positive. That means the dealer is getting more negative, less positive, and then to compensate, that becomes the stabilizing force to keep price stationary. That's the dealer response in the left side of this. And looking out on the horizon into next week, we have that, right? We have these puts, which are, I'm presuming these are puts. You don't know, right? That's the other thing, Tom, that this label only goes for the front expiry, which is day over day for the SPX. And so we don't know the composition of this, which is why I like to look at the individual instead of running NCharm. I like to run CHA, just, $ CHA, SPX, and then that gives you that separates the calls and the puts, and you can see it very easily who's winning the battle at any one point in time. So that's the first thing. So let's look at the upper side of this. The upper side of this is kind of interesting too. Basically, this is saying that out of the money calls are controlling the charm, and they're sitting right down here at 4,300. So basically, this is a downward force. Again, spot price being fixed. This is a downward force for this, but you can turn this thing on its side, and you can see net, probably the out of the money puts are winning, and then these will converge as we go through the day to in the money calls, because the in the money calls will keep growing, and they will eventually overcome what is the contribution from the out of the money puts. So this will be supportive at a given strike price. Here, these calls, these are out of the money, and they're decaying through the day, and then eventually they will decay to a level where the in the money puts will, they're in the money. They're growing to a -1 times the OI at that strike, and they will eventually take over. So at the end of the day tomorrow, before the close, we'll probably see in the money puts as the dominant and in the money calls here. But this is telling me, all intents and purposes, we're supportive tomorrow to the downside, and we've probably got an upper bound, and that upper bound is going to be informed by this 4,300. And as I zoom in here and just kind of look at this, there's not a lot of structure in the middle here, so we'll look at it in the morning again, but I'm not seeing, based on what we saw with the value stuff, whereas that, 4,300 clearly was the targeted strike. 4,310 has got something, and maybe there's some stuff here at 4,310 to pay attention to, but probably no higher than 4,310 if I were guessing, not knowing what tomorrow's data looks like. But that's part A and part B for this. Now, what's the other part of this? As we go into OPEX, this little area right here is obviously an area of weakness. We don't have the magnitudes that we have this week in the front part of next week. So absent of a holiday or something like this, we could see a little bit of drifting around or whatever the case may be. But you can see as we get right into the latter part of next week, given the structure we have today, which is going to change, of course, because of course it is. Given the structure we have today, we are still supportive into OPEX. So two things are going to happen. This is the SPX. These are going to come off. And they're going to come off one of two ways, and this includes the A's. If they're rolled off, they're going to be rolled from a delta greater than 50 to a delta more than likely less than 50, right? So that is a change, a negative change in delta. And what that effectively does is create a selling event or downward pressure on the market. So if you were to run this chart with delta, you would probably see that you've got a large amount of delta that is sitting out there. And that delta, it can be allowed to expire. These are cash settled. There is no rational, if they don't want to roll out and up or whatever, they don't have to. They can let it go and remain in the money. And if they don't have any fear that they're going to lose their moneyness, meaning it's going to finish in the money, then they will not be compelled to monetize any of it. And that, then it will just end the week with a lot of deltas that will come off at the end of the week. And remember, the AMs settle out Friday morning, the PMs of that day settle out Friday night. So last trading day will end up being Thursday for the AMs. So that'll be important. So how does this structure change for next week? But right now, it's basically saying we got a lot going on for next week in terms of positive delta or positive charm, excuse me. And this is going to be very supportive to upward deltas on our side of the book, negative deltas on the dealer side of the book, and the hedging flows they're going to have to buy to hedge flat, all things being equal. Now, that was part A, part B, and part C. Here's the unknown. All of this I've been saying, the spot price has been fixed at 442.68. When spot price changes, gamma comes to play. And gamma is a big deal. And if I move up or down the gamma chart, which may or may not have these same strikes, will be relevant. It just so happens we know plus Gex is at 4,300. That's a big deal because as we approach that, we know and we know it's call dominated. So right now, the 4,300 strike in delta is below 50, right? And as we approach it, we now have a rise in the delta there, right? So that is a more negative deltas for the dealer, and as a result, the dealer buys and we move upward. That's the pinning from below effect that occurs. And then if we move across that, things change. And this is where the dynamics really get interesting, and fireworks can potentially occur, right? So as we move across it, what was in the money or out of the money, because these are out of the money call dominated, they now become in the money. And so this call, all of this delta now adds to this put out of the money put delta or charm, excuse me, I misspoke. All of this call out of the money charm now becomes in the money, and it adds to the out of the money puts, and it becomes even more supportive. So now we're above 4,300, and we now have a new floor behind us. This is the phenomena. I've been studying this because I've been writing notes and taking snapshots of what's happened the last 2 Fridays. Once we cross a major charm strike, and then we couple that with the gamma, you've got a very powerful setup for moving north. Now, this is where I think value can really help us, because value can show us if we're targeting above to pull through one of these charm strikes or pull through a lower charm strike. Now, we haven't had an instance that I can recall since we've had this data of where we pull to the downside. But to the upside, we've had 2 Fridays now that we have beat through the charm strikes, and we've pushed upward. And every time we pull back, we keep pushing upward. And I think it's the phenomena that I just explained. It's that combination of gamma and charm that and where we are in the day, because now we've had that crossing over point between the out of the money calls and the out of the money puts, right? So I think, meaning one has flipped to the other and now it's in the money. So I don't know if this aligns with your philosophy of what you're thinking about for between now and OpX, but that's my 2 cents, and it's worth what you paid for it.
No, it's worth more than 2 cents. It's A, B, and C are pretty well understood. I hope that most people on the chat understand it, and especially C. I was looking at that. So regarding C, because I don't look at this chart very much, so obviously I can see the huge mountain for OPEX. I wasn't too bothered about the near-dated stuff because we see that every day. But is that big relatively for an OPEX or normal, small?
I'd have to go back and look, but I will tell you we're a week away, right? And charm is time sensitive, right?
Right,
and
so that'll grow. Yeah.
It's just going to grow. It's just going to get bigger.
Yeah.
But it gets bigger as time collapses, but spot price has to remain in this area. Because remember, if we go too far up the scale, if we push north, the deltas are actually going to limit at 1, and charm will collapse eventually to 0. There's no more contribution from a deep in the money call. If these are deep in the money calls, I'm making that supposition right now.
Yeah, but that 4,300 will way exceed. That's much more sensitive.
Well, and there's going to be other things at 4,300, right? Because we know COI's at 4,300, and we know everyone's gunning for 43 and 44, and blah blah blah. So the charm exists while it exists until we start. If we break through if we push through 4,300. I absolutely believe we have a new floor underneath us, given this structure. Now, it doesn't mean we couldn't test it, but boy,
we're talking about all being equal. I mean, it's very difficult nobody can tell. So I wanted to talk about D. D, I rarely have a bias on the market. Right now, I have some very, very bullish plays. I have calendars of 43.50, which is about as bullish as I ever get. And I have diagonals at 4,400, very narrow diagonals. They're all very bullish. I can control the delta, and I'm long futures. So on the put side, it's not that, because I don't make a lot of money from it. I'm just there to hold it up. So my conclusion from my own looking at it is just the 4,300, as soon as that gives way, okay, here's a good point. Sometimes I go into other gamma groups just to see what they're up to. And I just have a huge problem with this, the way that they call a call wall, okay? So, I have less of a problem with a put wall, but there's the 4,300 is not a call wall. I mean, it's just in no way, shape, or form is that a call wall. And I have even mods and people who claim to be experts telling me this, and I just don't even want to argue with them because it's it just doesn't make any sense. You know, it's not a wall in the sense that it just doesn't behave in that way. I don't look at 4300 as a wall. I look at that as a milestone, and especially if I see 4350 and 4400 being more and more targeted, I'm expecting in the coming days to see more targeting towards that. And if you combine this with the overall picture of the market, you know, I'm not like Michael who ignores all the noise. I know the noise and I keep it in the background. If you can see what's happening, all the meme stocks and all the crap stocks and all the rest of it, you got to know that sentiment is running pretty hot right now. You know that it's there's a lot of inflows, and you look at all the flow data. So all of that, you add it all up, and you've got to have a little bit of upward exposure right now. So if you, I don't care if you're selling premium or if you are speculative, you know, it's just for me. My conclusion is the same as yours. Now, all of that data, if I don't trade it, I shouldn't be here. It's just there's a good chance we push north of 4,300, and I wouldn't want to be standing in the way of that.
Right. So, final thought from me before we draw this to a close. So this was this morning's. I haven't updated this throughout the day here today, but this was this morning's landscape view of the SPX, and so this is the AM and the PMs. And there's a couple things that are notable. I know it's small on your screens, but this says 73,000. This line is the 4,300 line, and this, just to put this in perspective, we're normally down in the 20,000 to 30,000, 40,000 range down here. There is such an exuberance going on to the upside right now, and it's being represented by lots of premium in the form of gamma being presented to the market. And 73,000 contract equivalent is an for gamma, not for delta, for gamma is an incredibly large amount of gamma. Okay, gamma is a fraction of delta. So that's the first thought, and you can see the minor nodes, how they kind of roll out here, and then we take a look at 4,400, and that's this one right here, and 44. This says 50,000. Right, so 50,000 the units don't matter. But what if you get to know these numbers? And I would urge everyone as we go through, and you eventually you'll get this in the web tool, and you'll be able to play and hover and all do all sorts of stuff here. You'll be able to kind of keep track of this. You'll see these are abnormal numbers, right? And then take a look at this emergence here. This is 30,000, and this is the 4,500 line. Now, we've had comments in the past from people saying, well, it's because we're up there that, these are magnified. And sure, I absolutely get it that gamma is maximum near the money. So literally where we close today, that is going to be the maximum gamma. And then you multiply that by the OI. This is a representation. This is a direct representation of the bets of the numbers of the chips that they're putting on the roulette wheel. There is no ambiguity in this. There's no error in this. And the same thing exists on the downside here, right? So if we're coming up underneath this 4,300 line, and that the 4,000 line is down here, so here's 39, that would be 4,000, and this is 4,100. When you look at all of this, you can clearly conclude the market is not pricing in short-term stuff to come to the downside, right? All the money is being placed in inexpensive long positions to the north, whether, however they express that is however they express that. The point to this is that 4,300 is not a wall. I agree 100%. In fact, it is the largest gamma. And then when you take that and you couple that with the simultaneous reflexive transition of charm, which you're now, as we just said, you're now taking out of the money calls, which are dominant above us. And we talk about this every single day when we present the PBI to everyone. We talk about how we're so call dominated in the deltas above us, right? So now we have charm, which also is call dominated above us, and it's out of the money because it's this. But as this yellow line moves up, all of that charm now flips to in the money, and the sign, instead of being a decaying delta, it now becomes a constructive delta, and that happens as we cross 4,300. It just so happens the charm strike and the gamma strike are coincident. The delta so this blows your concept, not your concept, Spot Gamma and others' concept of a call wall, because it's going to have a huge gust of wind when it crosses the 4,300 if the structure remains the same, because now all of a sudden that charm, which was decaying, now becomes, which is just on the other side of this thing, now becomes constructive and now starts filling the sails and pushing us up. That's so much for the wall. So there's been a lot of commentary, like you say, out there in Twitterverse and all that crap. Let them do whatever they're going to do. That's fine. We have our own concept. We have the data. We're tracking this daily. I mean, this is all I do. It's becoming, the sequencing of the days is becoming very clear, and the if-thens that Michael teaches, that we try to expose here, are becoming extremely clear. If this occurs, then this is a definite outcome that could happen, high probability, because we understand the underlying mechanics. Doesn't mean it has to. There could be other mitigating things that we don't see right now, but the combination of gamma and charm can really have an influence. And then when the strikes are coincident, it's breathtaking. And just I'll leave you on that thought. It's breathtaking, and I think this is what invalidates exactly what you're saying. No, it doesn't invalidate what you're saying. It invalidates what others are saying, that it's a wall and it's not penetrable. And oh my God, Armageddon if we go above it. Maybe not. Maybe not.